Give us time to work it
HFR, we're on a road to nowhere.
We're on the road to nowhere.
Bump, bump, long or short. HFR from the floor. Miss Trade, Matt Davio. Let's see here. Let's admit them all. Admit. Mark and Lee in the booth.
Lock down there.
Hey, Lee, first things first, Lee, this is your jersey. This is your jersey. I'm wearing Lee's jersey before I send it to him. I just got it finished. And he's part of the Manja drinking crew, official Manja TV drinking crew, as we drink in baseball jerseys in the summer. Nothing better than a summer barbecue, somebody's backyard, in a nice, comfortable drinking shirt. And then we do a session.
Especially, the East Coast where you have the humidity and you need to breathe.
Oh, right? Yeah, and this one's gorgeous, dude. It's got the whole side panels are breathing.
Breathing.
Very, very well done. Very well done. Matt, I got some breaking
news. Breaking news, Tesla recalling 370,000 as price goes to new highs again today.
I'm seeing too that some of the other unintended consequences of being a Tesla owner is your insurance premiums are through the feckin' roof.
I bet.
Yeah.
Well, again, just with the trendiness of the car, the fact that people want to.
Well, I think more
look into them. They want to, see what you have in there. That's got nice windows, so you can see everything in those cars, right? They're so clean and they're so crisp as far as the design.
I think the problem is the battery is like 12 grand to replace, and there's other things that go wrong that are way more expensive than.
Well, how about double the Pinto deaths?
Yes, exactly.
Yeah.
Yeah. All right, Matt. Let me share. Speaking of feckin', I just said feckin'. And so I need to share this. I don't know if you show this, but American cancer patient develops uncontrollable Irish accent from his cancer. And so my immediate thought was he's calling everybody a feckin' twat, like right away, right out of the box. Right. Cannot stop telling people they're feckin' twats, right? Because let's face it, most of us are feckin' twats. I mean, that's all there is to it. Listen, I'm a twat, you're a twat, everybody's a twat. Let's just get over it. I'm so sick of it. And Matt, that goes on to this great article from Revolver about the woke AI and the dystopia's final frontier, because ChatGPT is the biggest twat on the planet. It's called AI twat, as a matter of fact. AI twat, chat. It's a great article. Go to Revolver and read this one, because it does pose some interesting dilemmas about an AI-driven future. I don't know. I thought I'd share that straight away. Matt, we came in with we're on the road to the recording's paused. Please unpause the recording. The market doesn't seem to want to go anywhere. And let me share again, because as this backdrop, I also want to share this little this gem of a tweet. And it's, you learn something new every day. I knew, and we had talked about this for several days to weeks now, about how the big players aren't fighting each other in a long short scenario, it seems to me. But this one from Robin Minotti, BlackRock, Vanguard, and State Street Global advisors, which employ 0.0004% of the global population and will soon control 50% of the global GDP. This is symptomatic of the disconnection between labor value and capital. It's also known as fictitious capitalism. And Matt, it reminded me again of the Ozzie Smith thing from yesterday, the collusion. Part of that story with Ozzie Smith is the collusion in Major League Baseball in the early free agency era.
Mhm.
when they said, no, there's free agency. And Ozzy at the top of his game received 0 free agency offers. He was making $1 million for Kansas City, and they offered him 300 grand for the next year. Well, the guy nearly lost his mind over it.
Yeah.
But the collusion was real. It was real.
Yeah, and I think, good way to describe it is, I think, I mean, I've said this for 15 years now, since the 2008, last time we sold off, right? When they saved all the banks, that's the end. Like, that's the end of free markets. And I think you're now starting to see that, because the illiquidity, which I have been talking about for a long time, you basically are left with the holders, which are all these guys that you just mentioned. And it's no different. So, to your point, it's no different in the equity markets than it is in the Bitcoin markets. You've got a few select people controlling all the flows now. And is it a problem? Yeah.
Well, here's the other thing.
I don't know how so does it resolve itself to the upside first and then to the downside? Maybe.
Well, the other thing too is the participation now, as somebody shared, and I cannot find the tweet. I'm so pissed at myself for not, because they're talking about 41% of the SPX volume. Think about this: 41% of the volume in the SPX is 24 hours or less options. Think about that. Nearly half of the volume is nickel slots now. And I talked about it yesterday and the day before. It seems to me now with everyday options at the Merc and with the SPX, they're selling everybody that wants to buy a 41 put, and they're selling everybody that wants to buy a 42 call. And they got this market pinged, and there's nobody to step up in a meaningful way to change the narrative. In fact, it seems to me they're all colluding. Like, there's nothing really coming down the pike for a while.
But I will say to you that this also looks like a chart that's about to blow off, or not. Who knows how high it can go? Well, it can go to 100, right? It could be 100%. So we're halfway. No, but I say this seriously, because when you get over that 50%, now it's like they got to stop it. They got to stop it, because there's no meat left in the trade for them to take the other side. So, like, there's not a lot. You understand what I'm saying? Like,
yes, I do. Yes.
So we're getting to that point where mechanically this won't continue to double. Again, if you double from 44, you're at 88% of the volume. What the hell are we doing here? Everything is a binary trade. Is that what you're saying? From now on, everything is a win-lose, win-lose, win-lose. This isn't football. This isn't football. No, it's not going to happen. I don't know.
Speaking of it, has Tiger teed off today? Speaking of win-lose, because our binary bet is that he either makes the cut or doesn't, and I'm saying he doesn't make the cut. Tiger does not make the cut.
I'll take one for the team. I'm the bookie.
See, but we need a real pari-mutuel setup, right? Because if everybody says he's going to make the cut, and I'm the only one that says he doesn't, I win all the money. And that's the way it should be. It should be like a pari-mutuel bet. Anyway, Matt, let's bring up the S&Ps. S&Ps.
But I wanted to bring this up because this is pretty powerful to look at, like how, really in 20, we went from, and this is, I think, representative of the world since COVID, right? And what this has created, all this money that rushed in to the fools, has basically created this, gambler sensation that is out of this world. We were at maybe 10, 12, 13% right before COVID, which was still astronomical. And now we've gone up to 44% last quarter. It's crazy, Bob. It's really crazy.
Well, and that type of participation is driving the market, because believe me, I said it yesterday. The option buying is a wish and a prayer,
you want to. If you want to make money in the ODTE, you got to sell the wings for sure. That's where the money is. It's not.
Well, you got to be the insurance pot. What insurance company has gone under in the last? It's been a while. Anyway, bring it up, because it's pretty clear on the profile.
What do you want me to bring up?
The SPOOs or the NASDAQ or anything you want.
Okay.
Because we continue just to go nowhere.
Yeah, I'll start with the day. Okay, because again, I was saying to you last night while you were playing some great music, by the way. tip of the hat, that I'm going to see what it does at the European Open, and I'm probably going to sell it. And, you know, we got up to the high here at the Asian Open, 12,792. This is the European Open right here, midnight our time. And again, it couldn't make that high there. And I got short right around, 63 on the SPOOs. This is the NASDAQ. I did not touch the NASDAQ last night, but I did get short. So let me just bring that up and show you what I was looking at. And again, I figured I might have to sell up to, you know, either the high of the day yesterday, which was 70 or so, I think. Yeah, right around 69, 70. That was the high right there. So again, I was selling, I was selling right in here, you know, right around 63 on, you know, this area, right when we opened. And I basically said, I'll give it a 10-point stop, you know, I'll put a 10-point in over 77, 73, something like that. And I mean, I woke up at 5 this morning on the West Coast, and we were already down here. We were down, I think this bar hadn't even come. Well, here's 5 o'clock. That literally happened at 5:30. There was some, again, another PPI number, I think, and it just, you know, washed us down. And then we continued to go. But again, this number 4,100, right on the open, Bob, right on the open. This is the open right here. That was the low of the day. We didn't test it. So again, this market, the way I like to look at markets, when you have big whooshes like that, you can bounce. But I sure didn't think we'd be trading 41.50. You know, and then that's right about where we got to, which is where this thing broke on that news there at 5 o'clock. So we got back. So again, I'm back short a little bit here because it's just silly. And this chart, and then what's silly is if you pull back, again, it's like every little wiggle is met with a counter move. There's no follow through up, no follow through down. So right now you got to, I didn't, you know, I covered, but I didn't get long down there at 4,100. There was no way. I mean, right here, this thing should have fallen all the way to 40.60.
Should have.
Well, the way I see markets, like when you get there, especially on an open, everybody's just coming in.
Yeah,
So
but our dynamic that we're trying to point out here, that all the 4,100 put buyers that expire today.
And everybody bought them here, not there, not where I did. Correct. That's the difference. And but again, that's your game. I don't play momentum. I've always faded price. I always, you know, wait for my price on the high end. I don't play the flush game. I think it's a dangerous, I don't play the breakout game for the same reason. There's tons of, they work when they finally work, but how many times do you have to get your head chopped off before you actually get the one that moves? And right now, for me, you got to close under 40.80 for me to get excited. You have to close under 450 on the NASDAQ. So the NASDAQ got right down to 500, didn't even get to that number. This got close, you know, 4,100 again is kind of close, but we haven't closed under those numbers. When you close under those numbers, and you and I have been talking about this since we've been doing the show, 4 years. I've been doing this forever. And I always say the closing price of the day, the closing price of the week, the closing price of the month, quarter, year, and those different time frames are the most important. The year trumps the quarter trumps the month trumps the week trumps the day trumps any other price where you close, right?
Bingo. Yeah, Trump. Let's make Trump great again.
Yeah.
Trumps. All right, Matt. I wanted to talk a little bit here.
You know, again, they ran them up here for from the open. So this is 6:30 to 10:30. You know, we've got a 4-hour run here back to the scene of the crime. Again, the news coming out is geopolitically, both internationally, everything is, you know, crazy, but we have an options expiration tomorrow, second one of the year. It's not a quad witching or anything like that. It's not a quarterly, but you know, it's a short month. Expiration is tomorrow for the month. So I think that's kind of hanging it in there. And then you have the long weekend. You got the President's weekend. That's a lot. That's a lot to unpack. Like it's hard to put on a big position right now.
Matt, I wanted to talk about the curve, in particular the Euro Dollar curve. I spent just a little bit of time in the Euro Dollar complex at the CME, filled in the waybacks, and a giant, you know, that Euro Dollar complex is a giant spread vehicle. mostly the big positions are people spreading, holding one expiration versus another. And I want to talk about this in the backdrop of everybody's crystal ball that the Fed was going to stop cutting or stop raising sometime this year, right? And then they'd actually start easing next year. Like everybody's got this all figured out. That's it. But you got to make a bet if you're investing. And so let me just share it, because my idea is the DEES butterfly, DEES 23, DEES 24, DEES 25, with the backdrop that nobody knows what this timeline is going to be like on the peak in raising and when the cutting actually starts taking place, that cycle. And there's a giant amount of uncertainty for sure. You cannot argue that there's uncertainty. But more importantly for me is there's a great trade available here. All right, the first chart here is the DEES 23, DEES 24 Euro Dollar spread. Now you will see in this, the DEES 23 fell with all the interest rate cycle raises. And that drove this spread to as much as $1.50 negative. So 1.5 full points of easing between these two contracts. Well, if they're wrong on the timing, right? If they don't ease until sometime late 24, like what if they don't ease for 3 years? Like my whole point is here, nobody knows what this future is going to hold. All I'm telling you is if they don't ease anytime soon, this spread comes back to even money, right? It's at $1.36 right now. It comes back to even money. And if that easing gets pushed out to 24, 25, let me bring up that chart. Whoa, I don't know, there's some bad data in there, trading view. My point being that this spread is going to do exactly what the DEES 23, 24 did, and it's going to go to a negative $1.50. It's at negative 34 right now. I might be completely wrong on this, the way I look at it. And if somebody that knows this quadrant better than I wants to chime in and say, hey, you're a feckin' twat, you don't know what you're talking about, please do. But that's kind of the way I look at this. The Euro dollar is a prediction of, it's pinged to the short-term interest rate.
Yeah.
Anyway, so a butterfly in this scenario would be long DEES 23, short 2 DEES 24, long 1 DEES 25. And you're basically betting that nobody knows what the hell's going on and when that easing cycle is going to happen, and it's going to happen later rather than sooner, and that will drive this butterfly. Anyway,
what's the risk, Bob? What's the risk on the trade?
You know what? Let me get back to you seriously on that, because I haven't found a good way to build this chart as a butterfly.
Okay.
Because then it's for me, if DEES 23, DEES 24 goes back over 150, so that's 15 points, $25 a point, I wouldn't want to be in the trade, right? And conversely, the DEES 24, DEES 25, if that got back above like negative 25, it's at negative 35 right now, 34.5. So that's another 10 points. So you're looking at 25 handles or 25 points, Euro dollar points. And honest to God, if the DEES 23, DEES 24 came back to par, that's 135. And if the DEES 24, DEES 25 goes out to 135, that's another 100. I mean, it's a pretty good, and believe me, this is a long-term type of scenario that's gonna play. But what's your confidence level on how far they raise, when they stop, and when an easing cycle actually starts?
Again, I don't see any. I personally, in the real world, do not see any let off on inflation coming anytime soon. They should have started raising much earlier. They should still be raising much greater than they are. I mean, we should probably be having a 10-year up at 8%, and we're not there. We got up to like 6.5. So I think we got to get there. That's, 8 to 10, 12. 16, 17, that's what you were looking at mortgages in the early 80s. And this is much worse. This inflation is much worse because of it was created. It was it's always created by government, but it was like
I think that's the other part of this.
We've never seen this. We've never seen this much creation of what do you want to call it? Fake
Froth.
money. Froth. So again, there is no playbook. There is no playbook, and so to your point, the confusion is not going to go away. It's going to continue to probably grow, and it's a tough market. It's a really tough market. I know a lot of traders. I talked to a lot of them. You talk to a lot of them. Nobody's having an easy time of it. If you're a day trader, this is a horrible market. Breakouts don't work, right? And thankfully, I'm not, by definition, I've never liked to day trade. There's very few times when day trading is great, and when they're there, I'll jump in and do that. But right now, you've got to trade levels, you've got to trade prices, and you have to be patient. And most people are degenerate and want to buy, the lottery ticket every day. And just like we started the show talking about that. So the lottery tickets are driving this market, and until they're bankrupt, and they will be, then they will be washed out. And when that happens, then we can move on to the next thing, whatever the next creation is for people. But they're going to have to, again, this wealth that was created has to be washed out. It's just, there's too many people made it without even understanding how they made it.
I mean, I think importantly too on the inflation front, how can you not understand that the government just having the opinion that their spending money doesn't matter? At
Right.
some point, it has to matter.
Yeah.
I mean, when what's his name from the Fed said, there's no amount of money that we can't put to this.
Right.
Well, so you just get to print money forever, and nobody, there is never a repercussion for it. Believe me, the Japanese have been doing it for 40 years, and it seems like we're going to try to kick the can down the road equally long.
Well, and if you love the history, you should, again, Marty loves to talk about coinage and currencies during times like this. Like, the Romans were done, technically right around the birth of Christ. I mean, that was the peak. And, it's interesting. And then Caesar kind of kicked it forward until the 30s or so, right about when Jesus was dying. It's fascinating. And then from there, and if you want to see the model of it, well, Rome, then, there's been many others in Central Europe, Austria, Hungary, the Ottoman Empire over, make loss. And then you look at the British, right? They've been kicking it forward now since World War II, but they lost. They really aren't the power that they were before World War II. I mean, Germany crushed them. And if you don't think that could happen here, especially what's going on, because I think people really greatly misunderstand this war that we're financing and creating this inflation for. Like, it really is not for the good of this country. I'll just leave it at that, and you can come to your own conclusions on it. But war is never good. It's only good for the few that benefit from it, and war itself never pays for the country. So again, follow the money and dig into it if you want, but this is not good for the whole as is being sold to you. So just keep that in mind. And I think we're, as we ramp up, I don't think the war is coming now, but probably 24, 25, it's going to come. I mean, they're going to be pushed. And there's plenty of people on the other side of this trade, from Russia to Brazil, that want their piece of the pie and want their comeuppance, and they want to be the next, right?
Yeah, for sure.
They want to be.
I thought the last thing that I read on Marty's site was he's got some real big cycles coming up sooner than that, like April of this year.
Yeah, I mean, again, as I've said to you, I think we're going to see a sell-off in the market. There's no doubt about it. We're setting up for it. This volatility, although the volatility is low, and you can't use the VIX anymore. By the way, that's been dead for years. The VIX is a useless tool. You can't trade off of the VIX. Because again, if you understand, the VIX is the OEX. It's the 100. It's the S&P 100 is what it is. Puts over calls is all it is. Nobody trades that anymore. It was very good in the 80s and lagging into the 90s, and then after 2000, it went away with the Nasdaq. It just went away because the the trading, just like now, like the VIX isn't important. It's those options that we talked about. That's what's
Right.
driving this market. That is what
Yes.
is driving the underlying action every day today, until it isn't. In the 2000s, it was the NASDAQ stock. It's still the NASDAQ stocks, right? And to your point, those companies, State Street, BlackRock, that Vanguard, that own, the chunk of all those major companies, they're not going to sell. They're the strong hands. They're the holders. So they're not going away overnight. And if you think that, you're a fool.
Yeah, and it's. I'll go back to it until you have.
Unless you ask for a district, unless as a Vanguard holder or as a BlackRock holder, unless you start asking for your money back, and that does happen. But until that happens, their power is still in their hands.
Not only that, until people start doing that, they don't become a little bit weaker, and that short bet, that giant short bet that says, you know what, they're weak, I want to come in and take them on. Like you need a bigger, a deeper pocket against money bet in this market. So anywho, anything else, Matt? I know, thank you. Lear Mark says a Tesla replacement battery is $16,000 to $22,000. You imagine, when you had I need a new carburetor. Oh, okay, that's the part's $38 and we'll charge you $300 for the labor. Right. So you're $350 all in for the carburetor.
Right.
I need a new battery. Oh, that's going to be $20,000. But the car costs $40,000. Yeah, I know, but the battery's half of that. Thanks for playing.
Yeah.
Matt, before we go, bring up the bonds, because you said that last night that was a big driver that helped your opinion making.
Well, it hasn't stopped being a driver.
Yes, I agree. Yeah.
Okay. Yeah, I mean, I'll just bring up the UB. If you want to look at the ZB, we can do that too. But again, these things are continuing to be, this is, and it is, if you don't know this, I'll say it again, the bond money is always smarter than the equity money. It's much bigger. The markets are much bigger. They're much thicker. They're much more difficult to do what's going on with the options, because there really, isn't a product like that.
Yeah, I don't think they have zero.
And the big players probably wouldn't let them come in and do it either. So you get I guess what I'm saying is you get a much more consistent view of the world, or you believe that these guys are wrong, right? Those are your two options. You can say, well, these guys are wrong and the equities are right. And I'm going to say, no, that's never been the case. Long term has never been the case. And we talked about this yesterday. I mean, the UB is banged up here 5 times at 146, 1, 2, 3, 4, 5. And now it's going to test that low that we saw at the end of the year of 133. Like, that's where it's going. That's a low end of value. And it doesn't appear as we get close to the day low again. This is selling off. Now you go into the day, right? We had a little rally. So equities will take anything to rally, and I guess this is why we rallied.
Yes.
No, I mean, I honest to God, I was saying this. I'm like, all right. Once that ended, I'm like, I'm getting short again on the equities, and that was, right around 9 o'clock, hour and a half ago. So they're leading. They're already going back down and testing this low from this morning. And again, that was put on. The low was put on right when we opened there too. So everything, there was a mechanical move there. Everybody came in and bought. There was buy programs, whether it's State Street, BlackRock, Vanguard, I don't know, but it happened. But this didn't prove anything. That didn't make me, bullish. And you start looking at the week. I mean, this week, don't forget, we were just 140 on Monday morning. Bob, this is a huge move. And from 140 to 135. Dude, I mean, it's just continuing to sell. So that told me you don't want to be, I wanted, and that market yesterday, as far as the equities, was so ridiculous. I mean, it was so light. There was no volume. And they just took it up into the close because all the day traders, again, had to get out. So that's why I waited. And, I didn't do anything all day yesterday. I was like, why am I sitting here watching this market? And then, to put it on at midnight, it's the benefit of being on the West Coast. You can take a look at it that time and see what it looks like. I like looking at the 3 opens, see how they all react. Do they all react the same way? Then that's that's usually confirms. If they start acting a different way, then there's an argument to be had. And it was a very low risk entry, I felt, yesterday. So closes are important. And then what the market does on the other openings are also important for people to look at. And that's why I just bring it up. So these are all contextual things that I think you need to be aware of. There's three distinct market opens: Asia first, US, or excuse me, Europe second, and US third, right? That's the way. And you got to figure out, is the tail wagging the dog or the dog wagging the tail? That's your job to figure out.
And it's so true, Matt, because there were so many times that I witnessed this cycle in currency trading on the floor in Chicago. You'd look at the overnight range in Asia and you're like, oh man, we're going to kill it. It's going to be busy today, and then we do nothing all day. And like, how is this possible? All the flow is being generated and done in Asia, and you are not important right now. And you got to understand that. Yep. Like, what time session is driving it? Mm-hmm. All right, let me share one last thing before we go, because Matt, yesterday I shared the Manja TV video on the Cajun candied salmon, and then I started getting shares. The Manja Nation is listening. Look at that gorgeous Cajun candied salmon. Shrimp Mojo, brown sugar. Forget about the beans. You don't need vegetables. Just stick.
And for Lee, you can do your tofu, right?
Tofu, exactly, or tempeh.
What was your brother talking about yesterday? How they must have soaked it. Give us.
He said they must have put it in,
because I'm not going to eat that stuff. But for the vegetarians watching,
yeah, you got to take your tofu and you got to put it in a press and press most of the moisture out of it, and then you season it with the Shrimp Mojo. By the way, not against the rules. Tempeh and tofu, fantastically seasoned with Shrimp Mojo. I mean, it's a showstopper for sure. Anyway, thank you for the Shrimp Mojo love and the Cajun candied salmon share, Manja Nation. All right, Matt, that's all we got. That's all I got. You have a great day.
Be careful out there. Again, we'll be back tomorrow, but we got OPEX and then monthly OPEX, and then we have long weekend once again. So salute to all the presidents but the orange man, I guess, right?
Exactly. All right, that's it. Thank you.
Thanks, Bob.
Hey, thanks, Mark. Thanks, Lee.